Are you thinking about buying your first home and just wondering what to do to get ready? Well, stick around because that's what we'll be talking about today. Hi, I'm Charlotte from the Volsch team. Welcome to my channel. If this is your first time here, I'm a real estate broker, certified probate specialist, and trust advisor in the many cities of the Inland Empire, including Loma Linda, Redlands, Fontana, San Bernardino, Rancho Cucamonga, Ontario, and the High Desert. Every week I post tips, insights, and updates to help you gain clarity. And today we're covering tips for first-time home buyers so that you can be totally prepared for a smooth process. Number one, start saving money for that down payment very early. It's common to put 10% down, but many lenders now permit much less, and first-time homebuyer programs allow as little as 3.5%. But putting down less than 20% may mean higher cost, and you will also pay mortgage insurance. For example, a 5% down payment on a $200,000 home is $10,000. So play around with this down payment calculation to help you land on a goal amount. Some tips for saving for a down payment include setting aside tax refunds, work bonuses, setting up an automatic savings plan, and using an app to track your progress. Number two is to explore your down payment and mortgage options. There's lots of mortgage options out there, each with its own combination of pros and cons. And if you're struggling to come up with a down payment, check out these loans. Conventional mortgages, they conform to standards set by the government, sponsored by entities like Fannie Mae and Freddie Mac, and they require as low as 3% down. FHA loans are insured by the Federal Housing Administration. They permit down payments as low as 3.5%. VA loans, guaranteed by the Department of Veterans Affairs, is one of the no down payment loans as a thank you to those of you who have served to protect our freedoms. And making a higher down payment will mean having a lower monthly mortgage payment. If you want the smallest mortgage payment possible, opt for a 30-year fixed mortgage, but if you can afford a larger monthly payment, you can get a lower interest rate with a 20-year or a 15-year fixed loan. Use calculations whether a 30, a 15, or a 20 is best for you. Or you may prefer an adjustable rate mortgage, which is riskier but guarantees a low interest rate for the first few years of your mortgage. Number three is most states and local assistance programs are currently on hold at this time. So those options are not readily available. Number four is buy what you can afford. Be honest with yourself. Budget accordingly. And put in your current expenses and what might else need to be calculated in there. Number five, check your credit and pause any new activity. When applying for a mortgage loan, your credit will be one of the key factors in whether you're approved. And it will help determine your interest rate and possibly the loan term. So check your credit. I suggest using Credit Karma as a good starting point for this because it's free and it doesn't impact your credit score to check it. Dispute any errors that could be dragging down your credit score and look for opportunities to improve your credit, such as making a dent in any outstanding debts to keep your score from dipping after you apply for a mortgage. So avoid opening any new credit accounts, any new credit cards, or auto loans. Number six is compare mortgage timelines. Most lenders have access to similar rates, all have fees, and have different timelines in their processing for meeting the timelines of the transaction. So be sure to get a map of those timelines so there's no surprises in meeting those things along the way. Number seven is be sure you get pre-approved. Pre-qualified allows you to see how much you would qualify for, but pre-approved means they've looked through all the necessary paperwork, examined all of your finances, and confirmed in writing how much they're willing to lend you and under what terms. Having a pre-approval letter is required before starting your home search. Number eight is hire the right agent. You'll be working closely with your real estate agent, so it's essential that you find someone you trust and feel confident they'll have your best interest top of mind. The right agent should be a highly skilled negotiator, motivated to run faster than you can imagine, and knowledgeable about the market, the programs, what's important to you. Now, before I share the last two tips, subscribe and click the bell to be notified in the next video. Also, comment below if you would like a free evaluation to help you get started on the journey to your home ownership. Now, number 9 is pick the right type of house and neighborhood. You may assume you'll buy a single family home, and that could be ideal if you want a big yard or a lot of room. But if you're willing to sacrifice space for less maintenance and extra amenities, and you don't mind paying a homeowners association fee, a condo or a townhouse could be a better fit. Even still, if the home is in the right neighborhood, that's the key. So be sure to research the nearby schools, look at the local safety and crime stats, map the nearest hospital, pharmacy, grocery store, and other amenities that you'll be using. Drive through the neighborhood on various days at different times to check out traffic and noise and activity levels. Number 10, stick to your budget. Look at properties that cost less than the amount you were approved for. Although you can technically afford your pre-approval amount, it's the ceiling, and it doesn't account for other monthly expenses or initial changes that you're going to want to make, or life issues that arise because life happens. Home shopping with a firm budget in mind will also help when it comes time to make an offer. In a competitive real estate market that we're in with limited inventory, it's likely you'll bid on houses that get multiple offers. And when you find a home you love, it's tempting to make a high-priced offer that's sure to win. But don't let your emotions take over. Shopping below your pre-approval amount creates some wiggle room for bidding, and sticking to your budget avoids a mortgage payment you can't afford. Thanks for watching. I'll see you next time.